Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In yesterday's action, we did see a minor sell-off as the S&P was able to move down to near its extreme levels that were projected on the market grid yesterday. It was reasonably uneventful. The market sell-off was driven primarily by financials. With the banks reporting, we saw Citi down over 4%. We saw JPM down 1.6%. And overall, the banks were a heavy weight on the markets. But as we look at the indices, they really were drifting lower. There was not a lot of downward momentum, but we did move lower throughout the session. We saw the NASDAQ remain reasonably stable, and overnight we're seeing some buying back into these indexes. Everyone was prepared for the big announcement by Apple with the iPhone 12 and other products. It was a dud. We saw Apple decline throughout the session, and there was no bounce coming from there. Typically after the announcement from Apple, you'll see a sell-off that day and possibly a bounce back. But as we go forward in this week, there's just nothing to talk about. I mentioned in yesterday's commentary that CPI was coming out, expected to show a 0.2 increase. That's exactly where it came out at. There was no effect at all on the markets. On Wednesday, we'll see PPI come out. That will likely come out the same at 0.2. And these are not material numbers right now. Market participants are going to begin to focus more on the claims numbers and the continuing claims on Thursday. And I'll talk more about that in tomorrow's video. But there's really not a lot going on for the markets to focus on right now. The stimulus talks have stalled. There's very little discussion even about that right now. So there's actually nothing to really drive the algos at the moment. We're likely to see some continued weakness for the next two sessions, even though we're seeing a slight bid overnight. Just to summarize, in yesterday's market, the S&P was down 0.6, Dow Jones down 0.6, the Russell down 0.7, and NASDAQ down 0.1. So it was pretty much a nothing day and nothing to really be derived from that. The other factor that I've been watching, and I will go through here in detail in a minute, is we're not seeing traction come in on the short-term database, which tells me we're going to stay in this sideways range. Let's go ahead and take a look at the charts, see what they're telling us for Wednesday. As we review the WaveTech database, as I mentioned in the opening comments, we're not seeing any traction at all in the short-term database. It remains at the 35.24% bullish level. We saw roughly 200 buys and nearly 300 sells. We actually had a slight negative rotation on the short-term models. While this was somewhat surprising, we remain under that critical 42% level. And this continues to suggest that we're going to stay in this very choppy sideways range. We may see a recovery over the next day or so. I don't see us trading into a new high. We should see the markets drift sideways for at least two more sessions. Reviewing the S&P futures, we are seeing a slight bid overnight. We're up 9.5 handles right now, up 0.25%. We're trading near the highs of the session. R1 is at 35.1725. My expectation is we'll see an R1, possibly an S1 level, which would be a new low from yesterday. But this pattern that was triggered by the RXT sell signal only lasts somewhere between 1 and 3 sessions. So the key level will be the high that we rendered yesterday, which is at the 35.45 level, and then the high that we saw on the RXT trigger was 35.41. If we got above that level, we could see a run toward that 35.80 level, but as I mentioned in the opening comments, I don't see that happening right now. As we review the S&P cash, as I mentioned in yesterday's video, once we get that RXT signal, we should trade toward the bottom end of the range, and that low was STX yesterday was 35.03. We saw a low of 35 even, and we closed at 35.11. There was a slight bounce, so we closed just above S3. As we look at today, the grid suggests that S1 is 3503, S2 3493. There's a critical number to watch in the next two sessions, and that is the low that we printed on Monday at 34.99. If we close below that level, that will confirm at least 2 more days of downward pressure. Reviewing back to the grid for Wednesday, this suggests that an S1, S2 level is likely to print. Probably will not get much above the R1 number. Volatility contracting over the last couple of sessions, we could see an expansion toward the R2, S2 number. It's going to be very difficult. The good news is we have a live stream. I'll be able to cover that real time as next market I'll cover is the NASDAQ futures. Overnight, we're seeing some strength. We're up about 0.5%. We're up 68 handles right now. The key number is going to be the R1 number, which is 12,167. So far, we've seen a 12,164 high, so we're very close to potentially completing this move. We should see a move back toward S1, S2 tomorrow, 12,021 to 11,939. If we did manage to print above R1, then we're likely to go to R2. That level should represent major resistance at that point in time. Overall, just like with the S&P, I'm expecting another 1 to possibly 2 days of sideways to down action. The next market I cover is the US dollar. Is remaining stable overnight. We're printing up toward that level that I mentioned last night, that 93.54 level. If we can get above 93.65, we could see a further advance. That this was most of the rebound that I was expecting happened yesterday. I don't see it going much above that level, as this market is also going to be locked inside the grid. The resistance on this market is R1, 93.63. S1 is support at 93.41. So look for a very narrow range in the dollar today between 93.63 and 93.41. The final market I'll cover tonight is gold. In yesterday's video, I had mentioned that I thought we could decline down toward the 1884 level. We did print 1889, and market sold off and closed below the extreme at 1904. We did see some follow-through weakness as it traded down to that 1885, reaching basically that 1884 level, which is on the weekly charts, which we'll review here in a minute. This market will continue to be under pressure, remain under its key moving averages, and as I have been discussing over the past several days, the key levels will be the 10-week moving average on the upside, and on the downside, the 21-week moving average at 1881. So we did see a print of 1885. We basically have worked that range, and the PPMs are accelerating to the downside with that weakness yesterday. So we're going to remain under pressure. This market is not going to rally, and in fact could see further move down. If we close under the 1881 level on Friday, then the next level will be into the 1700 handle toward 1795 to 1789. This will complete the video. Don't forget we have the live stream on Wednesday at 1:30. We'll see you there.